Hello, what is going on, traders? I hope everyone is well. Hope everyone is amazing. It's your boy, the Master of Coin. And guys, today I really want to show you an in-depth case study of a trade that played out today on USDCAD. Now, this trade here, honestly, is textbook when it comes. So, why did we take this trade? What was the thought process behind it? So, what I'm actually going to do is I'm actually going to go ahead and replay this, and then obviously we'll kind of get into it. So first things first, when it comes to taking these trades, I always like to start on the monthly time frame. Always start on high time frames. So again, starting on a monthly time frame, what can we actually see now? Obviously, we saw this. Again, this month we're in at the moment is still like the candle is still forming. Now, there's not too much here in the monthly. Of course, there's equal highs up here, but again, this is not relevant to current price. So let's just drop it down. Now, looking at a weekly time frame, looking at a weekly time frame last week, we did try to have some bearish momentum, but we did actually reject. Cool. So let's now scale on the daily time frame. Now, scaling on a daily time frame, what can we see? On this daily time frame, first things first, we can see this institutional candle, this last down close candle before the up move. Now, it also took liquidity, so again, it is a valid institutional candle. Now, again, institutional candles do need to have three specific scenarios, if that makes sense. That has three checklists for it to be a valid institutional candle. The first one is liquidity capture, and I'm not actually going to go through the other two today. They are actually covered in our course. So if you want to know more about that, then obviously you can hit me up. Anyway, so we have that area. Now, scaling now to a 4-hour time frame, what do we see? Now, looking on a 4-hour time frame, actually, no, let's back it up to a daily, because there's one thing I forgot to mention. Now, on the daily, what do we see? We see this massive wick here, this massive wick. Now, price did come up. Yes, it did come up to mitigate some orders. But, this wick is way too big. This wick is way too big. So let me investigate. Let me go on a 4-hour. And what do we see on a 4-hour? On a 4-hour, we can actually see some imbalance. We can see some inefficient price action. So this means that price is going to want to, magnetize to this area. And again, there's a little bit of imbalance left up here as well. Now, that does give us a much longer term target. Now, again, this trade is still playing out, so it could come up to here, it could come higher, but again, we'll have to see as the days and weeks progress. Now, looking on the 4-hour time frame, remember where we are. This line here is the daily open, right? This is the daily open. Now, because this is the daily open, we know that this is an area of demand. Now, this area here is an area of demand. Another thing I can see down here is a trend line. Now, there's this trend line here. Now, we see these touches. Now, this trend line, see, a lot of traders, they're going to be looking to sell this now. You see, no, I use this as a target. You see, this is what I call noob liquidity. This is noob liquidity. And liquidity, again, is basically stop losses, orders, take profits, different orders. A lot of retail traders, they'll be looking to sell once price actually comes up and touches this trend line, and they've probably got their stop losses resting above. So let's now keep narrowing it down now. So if we look on the 4-hour, again, we can see we did get that. We did get some breaks of structures. We did break some structure. We got that low, high, low, high, low, come up, break a structure, high, low, and then obviously it's looking to continue, right? Now, again, let's now scale into an hourly time frame. Look at an hourly time frame where current price was. You see, what we actually saw as we actually see this little down close candle that has been respecting order flow. Guys, order flow has been being respected. No, institutional candle here, price reacted. Institutional candle here, price is reacting. It is still in that body. Again, it doesn't have to just react from the area. This becomes an area of demand. And we can see that this last down close candle, this last institutional candle, creates an area of demand for us. So again, are we looking to blindly just take trades like that at the open? No, we want to see higher probability. We want to see more confirmations. Now, if we actually now look on the 15-minute, what can we start to see? On the 15-minute, we can start to see a couple things. We can see some equal highs up here. So that's another target. There's more liquidity up there. Another thing there was equal highs up here as well, which I forgot to spot. So that's, again, this is longer term targets. These longer term targets haven't been achieved just yet, but I still believe this trade is valid for them to achieve that. Now, what happened is it looks like we're beginning to round off. Like, just look what's happening on this 15-minute time frame. We're starting to round off. Price is starting to round off. You see, what I want you to think about, the market is like a car. Now, the cars, when they turn on the road, they don't just go, straight and then boom, right like that. No, 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 no. If a car wants to turn around, right? If a car wants to turn around, it can't just come up and do this. Like, it can't just go like that straight away. You know what I'm saying? It has to turn its wheels around. Especially the bigger the car, it takes, like a big truck, it's going to take time for that car to turn around. If you're driving a car 100 miles an hour forward and you just turn the wheel instantly right and your wheels lock, boom, it's not going to be good for the car because the momentum is still, that way. So what the market movers do is they actually bend the price round. They cause, different market phases, such as accumulation, such as distribution, which again, I'm going to show you a little schematic or of cycle of price thing. Let me show you it. Where is this? Let me just grab this up real quick. But I want you to understand that this is very fundamental about how price moves. So if we look here, we can see the cycle of price. And let me share the screen. We can see the cycle of price. We can see how price, curves down, comes down, accumulates, does your reaccumulation, comes up, and then curves down, and then just continues its curves. That's the price cycle. So whenever you're seeing, a curve in price starting to round off, it's very likely that it's going to continue, to reverse. So again, that's what we saw here. We are seeing that. We're seeing that curve. Now, again, we're in this institution, in this demand zone. So we can now narrow this demand zone. And if we now narrow this to this 15-minute, again, this last sell before you buy candle, look what happened. Price then came down to react perfectly off that. So if you wanted, you could have actually, had a trade there, stop loss below 6.6 pips. Nice, target one, 7.1 to 7.8. And again, this is not the best risk reward. 1 to 11 is still good, but again, we want to, narrow this down. So what did we do? We actually started to see again at our point of interest, at our demand area, we're seeing what price starting to curve again. Price is starting to curve again. So this means that if we actually break this down on a lower time frame, such as, for example, a 1 minute. But before I show you this, I want to show you a much higher time frame schematic as well, because what was happening is price was actually accumulating on a higher time frame. Now I'm going to show you another accumulation schematic, and this is pretty much what we actually got. So when it comes to Wykoff, again, this is the whole price cycles. Let me just share the screen. Here we go. So we see this, this accumulation schematic where you get your different phases. And we actually experience a very similar thing here. We got our preliminary supply. We got our, our seller's climax. We've got that, we've got that kind of automatic reaction. We've got that secondary test. We've got a secondary test area. Then what did we get? We got a sign of strength. We've got some bullish intent. We've got evidence of bullish intent. Now, see what a lot of traders would do here is, they're now gonna start buying off this area before it comes down to manipulate. I want you to understand that Wykoff and how the market moves is the market is always going to shake as many people out as it can. So when you see this liquidity form down here, what you need to understand, this is going to get captured eventually down here. And look what happened. Price came down to give us another, secondary test in phase B. And what happened after that? We then got our final spring, our final shakeout, that final shakeout. So after we get that final spring and that final shakeout, we can expect price to come back and actually test this area. Now, another way to kind of tell if your, schematic is going to be valid is if you're manipulating lows and breaking structure to the upside. An accumulation is defined of a break of structure to the downside. Sorry, a manipulation to the downside and a break of structure to the upside. Accumulation is manipulation to the downside and break of structure to the upside, where you're constantly, manipulating lows and then breaking structure to the upside. That's an accumulation. So that's what we got here. We're manipulating these lows and then we're constantly breaking structure to the upside. And here was our major break of structure here. This was our major break of structure. Now, this major break of structure now gives us bullish intent. This is now saying us, okay, cool. We are now getting bullish intent because we broke multiple structures. We broke lower high, lower high. We broke multiple points of structures. So this is now showing us that, okay, this market is going to want to move. Now, if we also want to start paying attention to the volume, we can actually start to look at the volume. If you look at this volume now, what can we see? You see, we can see volume. Let me step it up a little bit. If we look in here, what can we see happening? Maybe let's look at the 30 minute. It might be a little bit cleaner for volume. Yeah. We can see that the supply is starting to be absorbed. We're seeing what happened? The supply moving to the downside. We're seeing supply moving down. So what's happening in an accumulation is you're seeing the exchange between the buyers and the sellers. You're seeing, weak buyers getting shaken out. You're seeing that. So what's happening is the supply is getting absorbed. Supply is getting absorbed here. And then what happens after we spring? We're starting to now build up with demand. We're starting to build up with demand now. Demand is starting to rise after we get that spring. So what happens now? The market is fractal. So we actually get another accumulation within this accumulation. Look here, look in this highlighted box. So if I step this down to a 5 minute now, what's happening? We're getting the same thing. We're getting the exact same thing. Let me step this down to a 1 minute so it looks even cleaner. You see, what do we get? We've got that trading range. We got our, let's label it up. We've got our, we've got that preliminary supply. We've got that selling climax. We've got that automatic reaction. We've got those secondary tests in phase B. We came down for that spring. Now, in this case here, it did form equal lows. Now, when it comes to forming these equal lows like this, you see, I don't like that. But again, just because it forms equal lows, it doesn't mean that price can't, continue off. It doesn't always have to be mitigated. It's just good to have as targets if you have high confluence. Anyway, we've got that spring. Now, what happened after we got our spring? We got our bullish intent / breaker structure, right? We got that bullish intent. If we look at our structure, we've got low, lower high, lower low, lower high. Cool. Let's say we don't even deem that as a breaker structure. Come down to try to put another lower low. Boom, clear breaker structure. So we now understand that any trap or retracement in here should lead us to a continuation to the upside. So again, let's look at our confirmation now for entry. Now we're going to get that premium discount in price. Swing low, swing high, looking for a buy. Boom, below the 50%. You see what happens now within this range, we start to get another fractal accumulation in here. We get another accumulation. Look how fractal the market is, guys. We're getting the same thing. We get our what? Our preliminary supply. We're getting that seller's climax. What happens after a seller's climax? Automatic reaction. Change that. Automatic reaction. After our automatic reaction, ST in phase B. Now, given the test again of any supply, testing that area. Finally get our spring, which is our shakeout. And after our spring, obviously we get our test. So personally, I didn't actually enter it down here. But you could have actually entered it if you wanted to, maybe something like some sort of, again, 30-second or 5-second imbalance, maybe in that wick. But anyway, where did the best entry, present itself? The best entry was actually here on kind of that LPS. Those LPS entries are the best. Now, again, you can only know if a Wykoff's valid after you start getting that breaker structure. After we get those, look at that, manipulation of the lows. We started building liquidity. We built lows. We built liquidity. We manipulated lows, constant manipulation. Look at this, 1 manipulation, 2 manipulation. Manipulation, breaker structure to the upside. What happens now? Look at time, this combined time and price. We're getting it into New York. We're starting to look into New York now. Now, when it comes down to it, there's another little trick I always like to kind of add. I always like to buy below New York open and sell above it. So for example, where was New York open here? New York open was at 1 p.m. UK time, which was, where was it? This candle, it was here. This is New York open. So look at this now. Price, our entry is below New York open. So look what happens. Price comes in, boom, wicks you in. Now, again, this is just one entry, guys. There's so many different re-entries you could have taken on this trade. Now, you could have entered, from down here off the test of the spring if you wanted to. You could have entered, again, you could have entered this so many times. You could have entered down here if you wanted to. You could have entered originally when it hits this area, guys. There's so many areas, and it even comes up to give you re-entries now. Now, boom, that would have been another re-entry if you really wanted to. You could have re-entered again there and really started to stack these positions. But I didn't stack it, so I'm not going to obviously take credit for that. But look what happened. Again, this trade here could be executed with, look, not even a pip stop loss. Realistically, this trade here, look, 0.8 pips. You could have even narrowed this down. If you entered after 50% of that candle, your stop loss could have been even smaller. Your stop loss could have been, instead of half a pip, that could be let's have a look. Literally half a pip stop loss. So again, a risk reward now, this risk reward would be a clear 1 to 100. So guys, understand the power of these concepts, of these thought process. Again, same target. Sheesh. It's now 1 to 124. So guys, look at the power of this, and look what happened. It absolutely boomed. If you don't know about risk reward, guys, risk reward is the most important thing when it comes to your trading. See, a lot of people focus on pip count. Guys, pip count is completely irrelevant. Completely irrelevant, because look at that. We're talking, 64 pips, but that's a potential 124 risk reward ratio in 2.5 hours. If you risk 1% risk, guys, these risk reward ratios, 1% risk, you can make 124% gain. Yo, you're risking 2%. Yo, that's 248% ROI in 2.5 hours. Guys, this is ridiculous. Guys, understand the power of these concepts. Smart money concepts are a way forward. Now, be very careful with a lot of these YouTube gurus you're going to find. You see a lot of these YouTube gurus you'll find, they're still trading on TradingView free accounts to have ads. So guys, be very careful who you learn from. You see, myself, when it comes to, I get a lot of people asking me, Kieran, how did you learn these concepts? Guys, I didn't learn this from YouTube. I had to go and get a mentor. I had to go and get someone who's cleared a lot of money in the market to guide me and actually show me the concepts they use. Now, if you want to get access to that, if you want to get access to over 120 live educators, look at this. We have over 120 live educators going live with these concepts all throughout the day. We have different tools, different services for you to plug into. All throughout the day, there's so many educators that are trading these concepts, giving you live trades, but not just giving you the trades, they're going to be telling you how and why they come to that conclusion as well. So if you want to know a bit more about how I learned, you want to get access to our community, and you really want to get access and take your trading to the next level, feel free to send me a message on Instagram. My Instagram will be in the description. DM me saying 1-to-1 and I'll hit you back. Guys, I'm super excited. Go back to this chart. It happened on the 23rd of November at around 1 p.m. New York Open. Guys, go back test this, study this concept. And again, this is probably still gonna go. Let's see where it is right now. Let's retrace a little bit. Again, we're coming into this probably Asian session. Maybe you can look for another continuation tomorrow. But hey, again, let's see. Trades are done. It's Monday, 2.5 hours, phenomenal risk to reward profiles. With that being said, family, I'll see you all at the top, because the bottom is way too crowded.